From Los Angeles, TraderInsight.com presents Dr. Adrian Manz with today's 2-minute strategy session.
For TraderInsight.com, I'm Adrian Manz, and it's time for a 2-minute strategy session. One of the most frequent questions I get from new subscribers is, what do you do when a stock gaps well beyond the entry price? Well, we had an example in Harman International Industries, ticker symbol HAR. On a 5-minute chart, we see that the stock gapped lower, went almost to the profit target, got us to 10 cents from the initial profit target on the opening gap, moved below the profit target, then reversed, moved through S2, got up to S1, did a little pivot dance, and then popped above the entry price. And typically what I'll see newer traders or people who are on the plan for a very short period of time do is they'll take this trade on just a couple pennies of penetration above the entry. Now what the rules say is 8 to 10 cents, and that's the way that I trade them. I actually look for a 10-cent move because it's very easy to spot on a chart, particularly on a busy day, because I've already got the 10-cent against me line on a chart. And that's exactly where I want to see the stock travel to on a reversal move like we had in HAR. Harman moved all the way up to the central pivot, came within a couple pennies of the stated stop loss on the session, and what I've said in a couple videos is I like this as an early entry timing technique. So when I see the price playing with the central pivot, the first thing that I do is pop to the sector. This is why the sector is on every one of the intraday trading plans. Harman International Industries is a consumer discretionary stock. It's in the Consumer Discretionary Select Sector Index. Looking at the price action in that index, we see that it was also hovering right around the central pivot and breaking down right around the time that Harman was popping below the central pivot on a bounce from 43.76, which was the stop loss on the trade and provided support and resistance during the previous session. All that adds up to a nice way to get in ahead of the trade. 43.70 or so entry with a 43.40 initial profit target. Once it pops down and through, if I didn't get it up here, I'll go ahead and put the trade on at 43.42 as a confirmed entry at the price stated on the plan. Also remember, of course, that in order to do these early entries, I have to be sitting on the stock, so if I'm away or if a trader can't be sitting at the computer every single second and misses the fact that these stock and sector correlations are at work intra-session, then the logical thing to do is have a conditional order weighting that says if the last price is less than or equal to $43.42, enter the trade. If it goes to $43.52 before going to $43.32, stop me back out of the trade. Most of that can be automated. And really the trick is getting your software to alert you to the fact that you've been triggered into a trade so that you can get back and manage it once a position's on. But these are the things I look for when a stock gaps in my position's favor. It's already demonstrated an ability, if not a propensity, to move to that profit target on the session. So I don't treat opening gaps as a threat. I treat them as an opportunity. For TraderInsight.com, I'm Adrian Manz, and that was your 2-minute strategy session.